Hi, this is Paul from globaltradingsoftware.com, and this is a quick Elliott wave technical trading tutorial for swing trading stocks. I'm looking at VET on the daily time frame. I'm using the think or swim version of our Elliott wave indicator suite and our EMA Clouds. I'm going to go through this, but first of all, I've zoomed out on VET on the daily just to put to show you that I've got a channel in here. This bullish trend after the pandemic pullback. We've had a nice bullish return. We've still not got to those highs yet, but it is in a good long-term bullish trend now as far as I'm concerned. And one of the things we look at on the channel here is we've got a good touch just here where my cursor is, and then 3 or 4 touches down on the top bound here. One of the big things right now though is the center line. We're testing this from above, from below, from above, and just recently on this wave 4 pullback from above. We've got a one touch on the bottom there, and then we've got a linear support and resistance zone here. Just zoom in a little bit here just to talk about that one. What we're looking for here is some confluence of where we see this pivot touching this upper bound of the channel. That's the bottom of our zone, and then we've got this quite a few attempts to get through this price have failed, so that gives us the top of our zone. We translate that to where we are right now, and the wave 4 pullback, the profit taking pullback since earnings, has found support in this linear support and resistance zone. So let's just zoom in here now, because we're really interested in the performance of this 4th wave pullback, and we're going to talk about that right now. So one of the things we look for is we've got a nice wave 4 pullback, fantastic. It's found linear support in our previous support and resistance zones, but also at the bottom end of our amber channel on our probability pullback zone. So this amber channel represents an 80% probability it's going to go on and hit that automated 5th wave target zone there. So that's a good probability. Also, we see we've got 2 EMA clouds. We've got a purple and we've got a grey. The grey is 55 and the purple is 89. So on the daily time frame, we use these as non-linear support and resistance zones for those wave 4 pullbacks, because we find more often than not, we usually find non-linear support in the 55, if not the 89. If it breaks that, it's not going to hold. So far we've got linear support for the support resistance zone and the probability pullback zone. We've got non-linear support from the 89 EMA cloud, but also the center line of the channel. So there's a lot of support right here, and it's moved away the last couple of days. Really good sign. Also, looking at the behavior of this wave 4, we've got our Elliott wave oscillator here. We can see we come down, we pulled back on this wave 4, and we've crowned just within 90 to 140%, which is fantastic. We then look at our false breakout stochastic. So these yellow dots in the top half here, this is a strong bullish trend. And then when we see the stochastic pullback and crossover in the oversold zone against that, that's a good sign on that wave 4 behavior as well. It's like an elastic band. It wants to return to this overbought zone and get those yellow dots starting to print again. So wave 4 behavior is fantastic. We've got an amazing linear, non-linear support zone for that wave 4. We've gapped up earnings reaction. We've got some couple of good days in there. So where's our entry? So with the Elliott wave indicator suite, we have this green moving average and the red. The green is for longs, and this is what's called a 6-4 moving average high. So you'll see that's actually in the future. Today's Thanksgiving, so there's no markets open today, but tomorrow's candle position, we want to be breaking out of this 6-4 moving average high. So a 10.29 sort of entry there, or maybe just slightly here at 10.33, just above these highs here. Let's just adjust that now, and I've seen this. We want to be around about a 10.33 entry with our stop just below that wave 4 pivot there, around about 909 or something like that. So what that does is gives us a sensible conservative entry outside of this 6-4 moving average high. Stop just below this wave 4. That gives us a risk to reward of 1 to 2 to the automated 5th wave target zone, which is fantastic. But if this channel really does find some big resistance here, back up to these highs, we're still around about 1 to 1.6, so we're still a decent risk reward, quite a cheap stock, good swing trading opportunity here. May not trigger on Friday, could be on Monday, as long as the Elliott wave oscillator doesn't break that 140 down at the bottom here on that first subchart, and we don't get false breakout dots print on the oversold zone. This holds, this should be good. 80% probability it's going to go and hit that sort of $13 mark. So this is using tools to help you understand the trend, and then pullbacks within that trend. This fourth wave pullback of an Elliott wave is very crucial, because the fifth wave is the highest probability move, and that's what we're trying to achieve with this Elliott wave indicator suite. Yes, I've put a link to those EMA Clouds in there as well, because when we're swing trading, this 89 and 55 EMA Cloud are very, very responsive, and they're fantastic. And remember, when we're looking for those longs, that 55 has to be above the 89, because that gives us that bullish bias as well. Hopefully that helps. Speak to you all really soon.